Are you prepared to learn more about Tesla's continuous success story? If so, you're in luck. Because tech analyst and investor Dave Lee offers his thoughts on the company's most recent earnings report in this video, along with the reasons he thinks Tesla is only beginning its journey towards revolutionary innovation, Tesla propaganda that, in spite of obstacles and competition from established automakers, will ultimately result in a significant amount of money. Many analysts and investors were impressed by Tesla's Q4 results, which surpassed their expectations. So buckle up and prepare to learn more about what makes Tesla a game changer in the electric vehicle industry. Before we begin, I ask those of you who haven't subscribed to World Street Games to do so. Don't forget to hit the like and subscribe buttons. Dave Lee believes that Tesla is only starting out on its path to becoming the most advanced company in the world through innovation. The investor was shocked to learn that Tesla stock has increased by a factor of 100 in just over 8 years only by owning common shares as of March 2023, as you are likely already aware if you frequently watch our channel. Although there are more than 1.14 million followers to Dave Lee's YouTube channel, opinions regarding the validity of his analysis can differ from person to person. According to independent tech analyst Dave Lee, who bases his opinions and insights on his in-depth research and industry knowledge, the planned gigafactory in Mexico will serve a different purpose than first believed. He contends that the factory will serve a new market in Mexico, Central America, and South America that needs a more affordable vehicle than the current Model 3 and Y. In his view, this move combines a new price point for Tesla with new geographical directions. This is one of many of Dave Lee's original thoughts and insights, so let's hear what he has to say. Lee predicts that the factory and the new vehicle will probably coincide within the next 18 to 24 months, but after reviewing technical discussions, it seems unlikely that the 25,000 vehicle will only be available in Mexico, Central, and South America. Despite the current state of the economy, Tesla's results from the previous quarter at Tesla's most recent Master Plan 3 investor presentation, the company's results from the previous quarter were impressive. There was a lot of noise from the company, according to some observers, but those who know Tesla's presentation style know that it was realistic. Despite this, some people were uncomfortable and didn't understand the importance of the information because they were probably just hoping to get a glimpse of a low-cost car, but crucial subjects like the upcoming release of the Cybertruck, the company's efforts to scale up and lower manufacturing costs, and the announcement of a new gigafactory in Mexico were covered. Following the presentation, the share price initially dropped 5.9%, but it quickly rebounded and has since traded below $195, possibly offering some investors a buying opportunity. In general, it's advisable to ignore the commotion and focus on the facts, keeping in mind that the shares were bought at a substantial discount to current prices. According to Lee, a company's ability to generate revenue determines the value of its shares. Hence, Tesla's recent quarter results falling short of forecasts was a direct result of the company's revenue limitations. Even though the Tesla Gigafactory in Shanghai, which produced over half of the company's cars last year, was closed for several weeks due to electric issues. We remain optimistic because Tesla's management appears to have things under control, despite the fact that the Gigafactory was idled on March 28th of last year due to increased national efforts to stop the pandemic and an increase in the number of reported cases in China, according to credit lawsuits. Tesla deliveries in the current quarter should be comparable to those in the first 3 months of the year, and 1.45 million vehicles are anticipated to be delivered this year overall, so there may be some damage. According to Lee, Tesla needs to deliver more cars than investors anticipate and make more money than they anticipated in order for the firm to continue turning a profit each quarter. By 2030, Dave Lee hopes Tesla will improve. In addition to credit suits, we also have thoughts from Morn Capital, a venture capital firm that was co-founded by Roy Bahat, the former head of Bloomberg Beta, and Jeff Lawson, the CEO of Twilio. The firm specializes in funding businesses that employ technology to address significant issues with a focus on the nature of work in the future. They have funded warm capital firms like Figma, Idea, and Guild Education. The founders' diverse experiences provide a variety of entrepreneurship, technical, and investment expertise, which they use to spot promising firms and foster their expansion. In its investor letter for the first quarter of 2022, Warm Capital stated that it believes Tesla shares would yield a return of at least 10 times by 2030. Since the company's largest holding has been performing well recently, it plans to boost Tesla holdings in the first quarter and anticipates that at that time its stock would outperform the SP 500. Additionally, Gary Black has offered some intriguing forecasts on the future of the brand. For instance, according to Gary Black, its market worth ought to be $4 trillion. If all 1.4 billion shares of Tesla were in circulation, the company's market capitalization would be close to $4 trillion. Based on Black's prediction that by 2030 there will be 60 electric cars worldwide, the company is currently worth $1.09 trillion if each share earns $100. By the end of the decade, Tesla will produce roughly 10 million cars annually and 85 million light vehicles will be sold worldwide, but Black believes that things could get worse before they get better at the start of this year. After hitting a low of $108 in early January, the price of Tesla stock has been incredibly volatile, going up and down numerous times. There are a number of reasons why the price of Tesla stock can fluctuate, including investor sentiment, market trends, news about the company, and global economic conditions. The $1,000 mark is thought to be a significant psychological level for the stock, and when the price approaches or crosses this level, it may draw buying or selling activity. Additionally, some investors may be taking profits or selling shares at this level, which could cause volatility in the stock price. It is difficult to pinpoint a single cause for Tesla's price fluctuations, as stock prices can be unpredictable and fluctuate frequently. However, it is reasonable to assume that Elon Musk's actions on Twitter may have played a significant role, as recent declines in Apple and Microsoft stocks indicate that investors are losing interest in high-tech companies. However, Cathie Wood doesn't seem to care about any of this difficult business. Recently, ARK Invest stated that a share of Tesla stock would be worth $1,533 by 2026. Concerns have been voiced in China regarding the frequency of shutdowns that appear to have nothing to do with one another. Prior to 2026, the business projected that by 2025, each share will be worth $1,000. According to a previous post, the bull case predicts that the price will reach $1,667 by 2026, while the bear case predicts that it will reach $966, which is still over $66, which is still over 6 times the current price. Dave Lee has repeatedly stated that he intends to hold on to this stock for the long run, and that he still believes Tesla will experience a significant increase in value by 2030. Kelly's Blue Book appears to support what Leaves think. Kelly's Blue Book is a study and valuation firm for automobiles that offers data on both new and old vehicles, including Teslas. From January to March 2022, Kelly Blue Book offered a number of evaluations and rankings on Tesla vehicles, including the Model S and Model 3, which were praised for their technology and performance design. In the US market for electric vehicles, Tesla was the market leader. In 2017, Teslas accounted for 75% of all electric vehicles sold in the first quarter of 2022. Tesla Model 3s and Model 3s and Model Ys accounted for 68% of all electric vehicles sold in the US. Elon Musk's business appears prepared to challenge for the throne in 2023 when it intends to launch additional vehicle lines, including as the eagerly anticipated Cybertruck Roadster and semi-vehicles. Like its other factories in Shanghai and Berlin, its new Gigafactory in Mexico will provide investors plenty of room to speculate. One, please share your prediction on the value of Tesla's shares in 2030. Additionally, please remember to subscribe to our channel and give this video a thumbs up. Thank you for watching, and we hope to see you in the next one.